little bit of a double sound there.
Yeah, listen, that wasn't the smoothest, cleanest way to start the show, but listen, it got a little funky there. The music wanted to play a little bit of its own. Welcome back to the halftime show, everyone. Your regular host, Tim Justice, is not here. Matt is not here. They are busy doing very important things, but we're happy to be with you. Coach Mark here, hosting here, joined by the beautiful Emily, Cody Mackey, and Coach Canadian Old Money Holmes. How's it? Listen. I don't care how you're doing, but since I'm playing Tim's role, I will start with the, fake pleasantries. How are you doing today, Emily?
I am doing wonderful. My Washington football team got knocked out of the playoffs, but nonetheless, it's a beautiful day outside here in Washington.
They're the greatest team in the world.
I think you jinxed me with that song. I shouldn't have let you sing that song until after this.
Greg, how you doing?
I'm doing good. My team got beat out too, so I'm feeling, sad along with Emily there, but that's okay. My team had no business being in there in the first place, so I've come to grips with that the NFL season, as far as I know, is over. So
none of our teams made it.
Mm-hmm. All right, let's start with the technicals. Markets have been starting off a little jittery, right? Nothing panicky. We haven't broken any moving averages. We haven't broken any. The old breakout point acting as new resistance is still there, as we always do. Moving on with technicals, because technicals are the name of the game, I think, moving forward from this point forward. Lack of themes, people figuring out what rising yields and stimulus money and all that means. Let's start with the technicals. Greg, will you break down the technicals for us?
Yeah, so looking at the S&P 500 here, right now it's just working into a nice little bull retracement here, as far as I'm concerned. I still think the outlook is bullish. We always get these little, we could see a couple 2-3 day pullbacks. Nothing really telling us that weakness is coming. And I think that's what we're seeing here. We had pretty solid run for four sessions there. Now we're getting a pullback there. I think that's the 20 EMA that Cody has on there. So I expect we get back to probably that 37.50 mark there. And then, I'd be looking for a pivot at that point. If we get that would be old resistance there, which we know can become new support. If we get a pivot there at 37.50, then I think we're back to all-time highs again. I would watch that level very carefully. I guess Cody's got the 9. Sorry, that first pink line is 9. So it's right above the 9 right now. Like I said, I think 37.50 being a nice round number, very psychologically, when you get those half and round numbers, people pay attention to it. So I think that could be a level of support there. And until further notice, this thing's going to go higher. So
let's show the NASDAQ now, because tech has started off relatively weaker this week. Break down the tech chart for me, see if you see anything different, because we are already down to the 20. We have violated old resistance, didn't act as new support on tech, right? So we definitely have both, price relative weakness and certainly technical relative weakness. What do you see in tech here?
Yeah, so obviously tech's showing a little bit more weakness. This is the beauty of technical analysis, as far as I'm concerned. You can pick parts that typically act as support, and then you watch those particular parts, and if they act as support, then you can set up a trade going forward. If they don't act as support, then you look for the next level of support. And I think that's what's happening with tech here. We're getting a little bit deeper pullback than the S&P 500. Like I said, bounced right now off that 20 MA there. We're looking to see if that holds. If it doesn't hold, then you've got that 12.5 level there. You can see that it reached down there before. I would look for that as kind of the third thing I would be looking for. If we get much deeper than that, then we're starting to, if we start to get below 12.5, then we're starting to put in a lower pivot at that point, whenever it does turn around. And then that's when we have to go from this bullish setup to more of a neutral stance. And then if it continues on for that, then obviously we got to start thinking from a bearish standpoint here. Now the volume pattern on this, the volumes have been falling off. Those 2 red days that have been falling there, the volumes have been falling off. So there's not a ton of conviction with this little pullback. So I feel that with tech, it's very similar to the S&P 500 with just a little bit more depth. I feel like we're going to find a level of support somewhere here. Like I said, whether it's the 20, whether it's 12.5, one of those levels will probably hold. And when it does, then again, we're gonna work back up towards that high there again. That's how I see tech. Like I said, I don't see anything, out in the marketplace right now, especially with the stimulus package and all the other things we're seeing. I just don't see any catalyst right now that's going to drive this down nice and deep. And you could see that, I think that'd be Friday's, what's today, Tuesday, yesterday's candle, and today's candle is a little bit smaller. Okay, so that can be a sign of slowing momentum to the downside. And again, the real telltale sign here, as far as I'm concerned, is the volume. As the volume falls off, typically when we get some big red candles, you can see the last two before this, we had some big volume. Okay, and we're not getting that. So that means a lack of participation with this latest pullback. And sometimes, not all the time, but a lot of the times when you see that you get that slowing momentum into a known support level, and that's where we can make a pivot. So.
No, and certainly everything isn't showing weakness. This isn't a sell everything day. I mean, we definitely have the great reflation trade in full gear right now. And so, like, when you go to different areas of the market, pull up XLF if you would, financials, energy right now, there are definitely, and this is the beauty of being a trader, is I know sometimes people get so caught up in, I got to trade tech, right? I got to trade tech. They get in the mindset when there's been definitely clear patterns and definite strength in the market. And here we have financials with yields rising right now, just having a power little 5-day stretch here. After the breakout, you had a nice consolidation pattern, you started to stretch, and then it's just taken on fire. If you aren't in financials already, how do you play this?
Well, I think that depends solely on your skill set, to be honest with you. You've got earnings coming up for some of the big player banks, investment banks soon. With that said, if you have the ability to do neutral type trades going through earnings, then I don't really have an issue with that. If you're not that well versed in trading, it's probably best to hold off from trading through earnings. Now, fortunately, we've always got the ETFs here, right? The ETFs don't have the problem of earnings. However, one thing to keep in mind is that when these earnings come, if those companies don't do well, or if the market doesn't like the way they do, then it can affect the ETF as well. So you got to keep that in mind, even though there's not an actual earnings date on an ETF. So, always looking at the holdings of what makes up these ETFs and having a clear vision of what earnings can do to that, I think is very, very important. So how you play this one here, like I said, with some of the major players coming out, I don't know that I'm going to jump into this trade. It would have been a nice breakout trade here at 31, which I think we talked about a couple of weeks ago. All these breakout trades have been working out fabulously. Like, you look at the 29 level here, that breakout was fantastic, right? Then we had 31, which just broke out again. So this seems to be stair stepping its way up. If you wanted to hop in for a very quick momentum trade, obviously you'd have to be very nimble. That could be done, because I think there's no real ceiling to this that I see right now. You could hop in for a momentum trade. I might, if you've missed the pop, wait for the drop. I might wait for a pullback to 31 and then play it on a retracement, at least from the XLF standpoint here.
We go out to the option chain in February for cash flow traders. Can I get anything for those 29 options at the old breakout point for February? Or is that just completely evaporated by this point? I can get a couple pennies for it, right?
Yeah.
What do you think about that, Emily? As a cash flow trader yourself, do you have any exposure to financials right now?
Yeah, I do. I have a couple calls on Bank of America, but like Greg said, if you're not already in it, trying to get in it on the week of earnings is, it's a little risque even for me, and I like to be aggressive. But if you're not already in it, just wait for a pullback, wait for earnings to get past it. And like Greg said, if you're going to play the ETF, you could try to see if you can get something out of it. But if they do get, if the banking stocks have, not so great earnings and that ETF gets pulled back, then you have to, consider that as well. But I love Bank of America. I've been trading it for years and years and years. And in times like this, if you already have something already in play, look, maybe you might think about uncovering it and just let that, if it has good earnings, you'll be able to take some of that appreciation on the way up, or, look at getting into a put option to protect the downside. It really just all depends on what you have and how you want to play it. But for the most part, if you've already missed that run, then just wait for it.
No, go ahead, Cody.
I was going to say, if I could, there was one coach 2 weeks ago that was saying, watch these banks. They're gonna break out. And I remember that coach broke down 3 different banks that are all showing high bases, and even broke down where to trigger into each of them. So I just really think that was a smart play up on that coach's behalf.
Now, did you play any of those, young man?
I did. I personally, the one that I called that I said I think was the best play, which was the catch-up play, was Wells Fargo. And that is the one that I directly played, and it's doing me quite well right now. And I did it both directionally and through puts. So I bought the shares and sold puts.
On days like today, gold's down a little bit. We'll get to gold here in a second. A lot of tech areas aren't doing as well. Like days like today, having a diversified trading plan and a diversified portfolio can make all of the difference in the world, right? If you are only in tech, well, you're at the mercy of tech, right? But playing multiple areas of the market, especially when you see momentum in an area and those technical things, can make a huge difference in your bottom line. Whereas some traders are like, today's terrible. Other traders are like, my account's up. My account's up, because they're playing different areas of the market. Let's go to XLE for a second.
I think that's an important point about our reports there, Mark, too. The stock reports, the option reports. We go through all the sectors before we make the picks, and then we have a bunch of different picks from a bunch of different sectors. So it has some diversity built into it, which is great, right? That's why days like these still work out really well for those kind of things.
And I think that's the overall message that Mark's getting at is don't just try to play tech. Realize when you're starting to see rotation. And to your point of we make sure we diversify our picks within our stock reports every weekend. And the reason why is because we find the best setups, and then we let them trigger. We let the market tell us which sectors we should be in by having diverse number of picks with different triggers out there. The market will put us into the best momentum plays that are happening at the time. We don't need to try to outsmart the market or know what it's going to do next. We just need to see the technical patterns, set it up, and let the market tell us where we should be. And by doing that, and if you had been following and setting up those triggers, you should be in financials right now. You should be in energy right now. You shouldn't be necessarily in tech unless longer term. But swing trades in tech haven't been working. So why would we be holding on to swing trades in tech if they're not working when we see other areas in the market that are working? Let the market tell you where you need to be as you set up triggers throughout different stock picks every single week.
Yeah, seriously, it is like a diversified approach to trading. It really makes all of the difference in the world. And it's, one of those skill sets that we help develop at Tackle Trading for our members. If you're not a member of Tackle Trading, sign up for a 15-day free trial. Go to tackletrading.com, hit the store tab. But energy here. All right. So once again, we have this great reflation trade that ever since the Dems won the 2 Senate seats a week ago today, where there is this hope, desire, thought, speculation that there's going to be a lot of money pumped into the economy through fiscal stimulus. Reflation trade came back with a vengeance over the last few days. You look at these areas of the market, they've been on fire for the last week, a little overextended in the short term, but here we got a breakout of short-term resistance on XLE. Go to last week on the Trademaster show, Greg, pull up Apache APA, and you're seeing this in different areas of the energy sector. You're having clear breakout signals developing, breaking off of short-term resistance over the last couple of weeks, and even breaking some of those longer-term resistance levels. Where do you go here? Let's say, and a lot of people don't have any exposure to energy at all. They don't have any exposure to energy at all. How do you play this?
Well, I think you got to look at the individual stocks like Apache here. So this trade, even though it's broken out today, there's still, if you go out just a little bit there, Cody, just zoom out a little bit. If you look at this, so even if this break, even if you get in today above the high of this break right now, okay, this thing's still getting to at least 20, which is, you know, almost a $2 move. If you get beyond that, 22.50, 25 or longer term, you know, targets and things like that, you can find these plays. Like this is a classic head and shoulders, inverted head and shoulders pattern here that happens to be breaking out to the upside right now as we speak. It's not like you necessarily missed this trade. Getting in above the high of this, you could still have a decent run as long as you have the ability to get your 2-to-1 risk reward, right? So getting in above the high and maybe putting your stop below the low, as long as it's out past an ATR, this is still an opportunity. And there are lots of opportunities in this particular space for that. You can see it in the ETF. What you do is you go out and you find these stocks that are in that ETF and you see what they're doing. Maybe they have broken out already, as this one is. Maybe they've gone a little bit too far. You wait for the retracement. Maybe they haven't broken out at all. And that's when you can set up your buy stop limit orders and take advantage of these breakouts. Take advantage of the prevailing winds. And the prevailing winds, is, as I talked about at Trade Masters, there, energy is playing catch up. This was one of the sectors that was pretty beat up over the last number of years there. And so now we've got a chance for this thing to catch up. And that's what we're seeing. We're seeing that movement now. And this is where you want to be. You want to be where things are moving if you're a directional trader, right? Even if you're a cash flow trader, you know, direction can still be working in your favor as well. So that's how I see that you play it, is you find the individual stocks with the most amount of strength, and then you can enter those types of trades.
All right, so we're gonna play a little game here. I like games, right? You know, games are my favorite thing. Pull up ExxonMobil's chart. I want you. Would you rather? All right. Let's say you have zero exposure. There's gonna be two aspects of this game, and I want everyone to tackle trading to play it too. Would you rather Apache, XLE, or Exxon? First of all, the trading instrument itself, XOM, Apache, or the diversified ETF XLE. Cody, I'm going to start with you.
All right, let me make sure I unmute myself. Let's see. Let me look at these charts. Apache, XLE, Apache, and we were just on ExxonMobil. Of these three, I'm going to go with Apache. And the reason I'm going to go with Apache is I like the head and shoulders, everything Greg just broke down, breaking out now. I can clearly see the two targets. XLE is also breaking out, so I like that one as my second choice. Typically, your ETFs don't move as quickly, so there's not that velocity of money. XOM, I would put in third place just because I feel like this is a little extended in its run. It does still have room to run, but with the overextension, I feel like I have more velocity with my investments or trades in the other two.
Emily.
I am gonna go XLE first. I'm ruling out ExxonMobil only. Well, earnings are still a few weeks out. It's February 2nd, but kind of like Cody, I like XLE first because it's just the ETF, so I don't have to worry about all the other, you know, craziness with earnings and stuff like that, especially now that we are in earnings season. Apache, I love the reversal head and shoulder as well, and I see the same thing as Cody is seeing with the profit taking at 20 and 22. But I think I'd go with the ETF. If I'm going to do a long play with that, I'm going to go ETF. I don't have to worry about the craziness. I can just you know, just directionally play that or even cash flow that and see if I can find some naked puts at some good levels.
All right, and Greg, what do you think?
Well, I got to go with my original pick, and I got some different reasons why, I guess. But like I said, I love Apache here. It's just breaking out. It hasn't broken far enough that we can't get involved with it. Like it's giving us what we need. So there is a trade available there. I like the fact that it's a low dollar stock. Okay, so this can fit anybody. Right? If you've only got a small account, you're dealing with an $18 stock here. So you can, you know, if we get a $2 move on an $18 stock, that's a heck of a rate of return, right? And then it's, as we can see, that's infinitely possible. As we've cleared all the moving averages, our next resistance level would be this old red candle. I can't even see when that was, but you know, it's got the potential to get to 20. It's a nice round number. So you've got that availability there. So I really like Apache for that reason. Earnings is still out in the middle of February, I believe. So you've got time for this thing to move. If we did our pay range here, you'd see that this thing moves a couple of bucks in a few days. Like it's got to get the ATR is like 95 cents or something like that. So it can only take a couple of days to get there. So you've got time for this here. The XLE, like I said, I don't mind that trade either. The difference being it's $20 higher to get involved with that. So if you're just stock trading, you know, you're going to have to lay out a little bit more capital to get that move. And as Emily said, it doesn't tend to move. And I think Cody may have said this as well. It doesn't tend to move as quickly as some of these individual stocks. So I really like that. Now, as for Exxon's very interesting. I feel that, like Cody said, it's overextended here, but I feel that there's a massive opportunity setting up here. If you look at what we're looking at today, we've got a doji candle here, okay? And look at the level at, I believe it's 44, what is that, about 44?
Cody, pull up Exxon. We're looking at Apache.
No, we've got Exxon now.
I'm delayed. Never mind. I'm looking at the YouTube.
So yeah, what I'm seeing here is this big heavy candle there. Now we've got something that looks like a doji setting up. I could see a pullback right to this 44 level here, and that would be a stellar retracement. Because what you would see if that thing pulls back is all of those moving averages are going to come together. And typically when moving averages come together, they're building energy. And when you build energy, you usually get a nice little pop. So this would be your classic 1, 2, 3 type trade. And I think if we get that pull back to that known support level at 44, and then we take off, you know, like I said, ultimately longer term, you're looking at 50, 54, 55 as a longer term target. So like I said, I don't really like Exxon right now because earnings is coming up quite quickly, right? But I would be paying very close attention to this going forward, because if you get that pullback, I'd be putting in an alert right around the 44 level and wait for that pullback, wait for that confirmation, and then boom, I think you get a real sweet trade here.
All right, now for, you know, listen, it's been a cash flow paradise for the last couple of months, one of the best cash flow environments I've ever seen. What about a wussy cash flow trader like me? Evaluated trade. I did Apache. I did it in February, naked $15 naked put in February this morning. Evaluate my trade. Give it an A, B, or C.
You did APA. Sorry, go ahead, Cody.
On the upward movement, short break of resistance, I sold the 15 February. You know, this is very classic what I've been doing for the last few months. Very conservative. The 15 Feb.
That's a little bit closer than you normally do, Mark.
Mm-hmm.
I like energy cash flow moving forward. I really do.
I think so. What we just talked about. Sorry to interrupt there, but what we just talked about, the fact that the XLE and that can be a bit of a slow mover. I don't mind your trade on Apache here. I'd definitely give you a B plus. You know, you're down. You got a couple levels of support there, so I like to be below that for a cash flow trade. Like I said, with Apache here, I think you get a little bit more directional. And if I was trying to play this, especially with a low dollar stock, I might want to go a little bit more directional here. But with XLE, we've got the same kind of strength. It's showing the same kind of strength, only it doesn't move quite as fast. That might be where I go look for some premium in a naked put or a credit spread type trade.
Now we go out to the trade tab. What are you getting for those Apache Februarys right now?
So I'm going to go to the Analyze tab, which is where I love to go. And the reason I like the Analyze tab is because then you can always look at the risk profile as well, which I think is the most useful tool in TOS, bar none. So right now, selling that 15 in February as you did. The mid of that's going to be about $62. Yeah, 65 or so. So getting 65 cents on a $214 investment, what we're looking at, 65 divided by 214 is a 30% ROI.
Not too shabby.
Now, that's not too shabby at all. Now, I also want to add the caveat, which Mark, I know that you are really big on. If it drops down to 15, you are willing to take ownership of Apache at 15, correct?
Yeah, I don't like in this environment. I don't sell naked puts on anything that I'm not willing to take ownership of, and then institute a cost average down. So if Apache then were to drop to 12 or 11 bucks, I had another 100 shares, average cost down, and so forth. And one of the reasons, and I started analyzing, one of the thing on Trade Masters, the show we do every Wednesday here on YouTube. Greg brought this to my attention last week, and I was like, man, this is a good situation. Easy stock, that low stock to cost average down on, if for whatever reason, right? If energy just were to absolutely turn, don't think that's going to happen, or I wouldn't have sold the naked put in the first place, but you never know, right? And so if energy just were to just absolutely just crap the bed at this point and go back down, easy stock to cost average down.
Well, the reason I think that's a good caveat to make sure we always say is a lot of students will look at that that number like, oh, 215, that's great, and then if it starts going down and they're not willing to take ownership, that's when they can start getting themselves into some sticky situations. Because if it were just to drop down to 15, then you're seeing $100 loss on your naked put, and you're like, oh, I don't want to take ownership of this, and then it keeps dropping, you keep seeing that number turn more and more red. It starts to scare some of the newer traders out, and then they end up taking the loss and say, well, this didn't work. But there's a difference in trading naked puts when you believe in the company and you're willing to take ownership. Because if you took ownership at 15, then you're actually being paid to take ownership of it. So your overall cost average for owning that stock is not $15. It's actually going to be right here at this break even at 14.43, excuse me. And understanding that as you are taking ownership of something that you want to own by use of a naked put, it's a matter of buying something you already want to own at a cheaper price than it is currently, and or cash flowing off it if it never gets to those prices that you're willing to take ownership. And it's a different mindset than just trying to leverage as much of your capital as you can in order to cash flow. And understanding that, I think, is really, really important, because after Mark this morning before we got on halftime report, he showed me this trade. I liked it myself, and I made the same trade. Now, I have the same view that Mark does. If this were to drop down to 15 or lower, I'm more than happy to take ownership of Apache, because I agree with the overall analysis that all the coaches have just been giving on what the energy sector is doing. So if we were to drop down to 15 and I own Apache at 14.43, I will very happily hold that Apache at 14.43 and then continue to hold it as the energy sector moves bullishly, and or sell calls on top of that to where I can boomerang trade this thing.
Yeah, and Cody and myself, what we did? We didn't sell 10 naked puts. We sold one naked put, right? It's part of a cost average down that you learn, and it's the one mistake I see new traders, because of greed, because of froth. It's like, well, I like this trade, I'm going to do. Don't do that. Be careful if you're going to follow along. Let's go to one other hot area of the market right now, XLB. Listen, and Tim, Tim's not hosting because we just spent 17 minutes on oil, right? We just spent 17 minutes on oil. Who's in charge. Daddy Mark's in charge right now. XLB, another hot area. There are such clear leaders right now in the market. There is such clear, since the Dems win on Tuesday, it's not even no-brainer. We got a classic. You don't get this setup on XLB very often. On the materials sector, materials has been something we've been talking about a lot in a big picture scheme over the last few months. Big, huge run up, nice consolidation, beautiful pattern. Anybody doesn't give this pattern? What do you rate this technical pattern right now?
I'll go.
Rate the pattern itself?
Rate the pattern.
Well, it's leading in our sector rankings. It's leading, our sector rankings. So why, it's got to be up there. It's definitely bullish for me. And this is why I love, what we do with our scouting reports over the weekend, because it makes our job really easy to just go in there and find which sector is leading and click on that link and go find some stocks to trade in that ETF, in that sector. But yeah, I absolutely love XLB. We've been ranking it, and it's leading. you know, it's XLB, XLF, and XLY, but right now XLB is definitely leading.
We've been seeing this in our stock report and our scouting report meetings a lot. High bases for the last, geez, I can't even remember when a high base didn't work. Like they all seem to be working really well. And this is a classic high base ascending triangle. And it just showed us, right? It literally just showed us, 2 weeks prior that it has the ability to go sideways for a little while and then have a big breakout. So even if this thing goes sideways for a little while and then breaks out, so be it. Be ready for that breakout. Be ready for that explosion, and collect yourself some quick profits. Like this particular green candle there 4 days ago, 5 days ago. Like look at the volume on that thing. That thing was monster. You catch one of those runners there. That's big profits, right? So this is what we're looking at, and this is what we've been seeing, and at least what I've been seeing in the scouting reports, for the last couple of months, is a lot of high base breakouts, and they just been working. If you get your stop losses in the right spot, you get your entries in and have some good targets set up, they're just working again and again and again. So, the old thing is, if it ain't broke, don't fix it. And right now, high bases are looking pretty good to me, especially with the Dems taking over and the bullish nature of things that we're seeing right now.
Now, I've witnessed you reference volume 3 times. So if I could pose a question to you, how do you use volume as an indicator within your trading? Because I've heard you reference it 3 times now on this show alone, that not only are you looking at the pattern and liking the pattern, but you always look at the volume as well when you're analyzing your pattern.
Yeah, so volume, basically, when my first mentor many years ago, he only looked at 2 things, price and volume. And so price obviously is telling us where it's at and where we think it's going to go. And then volume is telling us who's involved, right? You have to have participation. If you don't have participation in the moves, then you're really not going to get those big explosions typically that we get here. And so with these kinds of breakouts, typically you get higher volumes. You can almost see them. Like if you look, I haven't looked at this pattern particularly, but when I see these high strong moves, this is what I'm expecting to continue, right? And so when you start to see these things, the smaller candles and the volume falling off there, well, what I'm expecting is that when it breaks that next level, we will see more participation, because what's happening is not all traders, a lot of traders look for the same things. Like we've all been saying here today, all 4 coaches who are a very diverse bunch of us, right? We all live in different places. We all look for the same things. We're all looking for those breakouts and those retracement patterns. We're all looking for those same things. So when we get these high volume patterns, it's an indication that more people are involved. When you get really big things like this breakout here, that's an indication that institutions are getting involved.
Yeah, I mean, okay. When you look at the timing, first of all, on Tuesday, before we knew the election results, we had above average volume. There was a lot of front running that went on Tuesday. You saw marijuana stocks, solar stocks, materials. You saw things that if the Dems were to win, you saw some front running. And then you saw this massive explosion in volume on materials on Wednesday, the day after the Dems won both Senate seats. And I mean, that's not a lot of that is institutional money, right? Does anyone not think that a lot of that is institutional money?
It's absolutely institutional money to get that kind of volume. But that's the indication. Like you asked me, Cody, how I use volume to indicate things. I use it to indicate the participation. And when you see spikes like that, or even front running, as Mark said, when you see things like that, that means more people are paying attention to it. More people are getting involved. More people are participating. And if you get that participation, that's when you get movement. And really, as swing traders, we're looking for that movement. And so those patterns, the fact that we've got this sideways movement here with this falling, the volume's just falling off. So typically what that tells me is, the volume will fall off, and then you'll get a big move. And it's either going to go upwards or downwards, and it's going to be a big move. And what you'll see another spike in volume. So when we see that falling off volume, what I'm looking for is that break to the upside. And if we get it, you should get an increase in volume as well, because we're all looking at the same thing here.
Yeah, we're all looking at the same. I saved the one I like the most for last here. It's a pretty pattern, The sentiment is there. The volume spike is massive. I mean, this is one of those charts that when you look back on 6-9 months from now, I mean, anybody surprised if we're not up, a good percentage, right? Makes for a good swing trade, makes for a plus position trade, in my opinion, when you get a breakout there. So XLB, a few nuggets to think on out there, tackle trading community.
That was fantastic. Old Money Homes.
Old Money Homes bringing
I saw the good teaching moment there, and I pushed you to bring it to the house, and you did.
Thanks, buddy. You lobbed it up, and I'll smack it out of the park.
All right, so let's run around to the world of commodities here for a second. Let's start with oil. We talked about energy, so we're not going to spend a lot of time here, but we are seeing strengthening. Yesterday, I talked about how the sewing circle in oil was getting really, really frothy, expecting higher oil prices. After the show, Goldman Sachs hiked their oil price target up to 65. Oil leads, those energy stocks follow. Listen, I've been around a long time. Someone disagree with me. If energy goes up into the high 50s, there's no way Exxon, Apache, XLE, and the rest don't have a good time, right? Like, it's just going to happen. So oil's chart is very constructive. Its sentiment is really starting to build. Goldman giving it the nice upgrade to $65 price target yesterday. Let's go over to gold. Now, the only thing not having a party in my portfolio today, it seems, is gold. Now, I have zero. Now, listen, I'm a cash flow trader, so I actually like this kind of stuff because it gives me more chance to cash flow gold instruments at lower prices. How are you all playing? I'm sure everybody here has exposure to gold. That's not. How are you managing your gold positions? That's the $1 million question I have for you today. Emily, let's start with you.
Same as usual. I mean, this is a cash flowing instrument for me, so it's always looking for, lower entry levels if I need to add to my positions. But gold is a long-term investment for me. I own the physical, obviously, and I cash flow on the markets to offset that. But yeah, it's just cash flow. There's no other way to play gold other than cash flow. Trying to be directional with gold and trying to swing trade that, no, find other things to do that with. Just cash flow with gold.
All right. What instruments do you got right now?
So I've got some calendars of gold. I've got, I think I'm all the way out in June or even July where I'm doing some calendars with that and just cash flowing, selling
the futures or with the?
Oh no, the ETF, the GLD.
GLD. Okay.
Yeah,
That's what
GLD.
I wanted to.
I always play the ETFs. I don't play the futures on gold. I'm not that fancy quite yet, so I stick with the ETFs, the slow moving stuff.
What about you, Cody?
All right, I'm gonna put on my best Matt impression, so I'm gonna keep my camera down just so I can do this. Gold is always a buy. You can ask me yesterday, you can ask me the day before, you can ask me a week from now. It's gonna be the same answer. Gold is a long-term investment. It protects against inflation in the market.
You got to do this. If you can't buy gold on the 200-day moving average, when can you buy it?
Everyone wants a dip at gold, and then when you get it, people are upset about it. You got your dip now. You want gold long-term. Buy it. Protect your portfolio. Long-term inflationary asset. Gold is always a buy. It will always be a buy, and I will always say that gold is a buy.
Oh, wow. Good job, Matt.
Gold is one of the things. I mean, the thing about it is, like Emily, like I play the miners. Go to AUY. A lot of what I do on the cash flow is play the miners. It's a very, very simple plan. It is sell calls on shares you own. And if it dips, buy more shares. And then if it dips more, you buy more shares. And you lay out the plan ahead of time. And it is just, gold is just one of those instruments I have zero fear. It is the easiest thing to add more of for me when it goes down than any other instrument. Now, I'm not adding 1 billion shares at once, right?
Right.
You responsibly do it, because no matter how confident you are in an instrument, every once in a while you're wrong. And so you never do anything irresponsible. You have a plan where when it goes to a certain level, you add more shares and you start cash flowing those. And then if it goes even further, if it went down to $4, guess what? I'll add more and I'll cash flow. Same thing with GOLD. Recently, so I have a naked put expiring at 23 this Friday, right? It's right there. Could be close, right? And then I'll start, if put those shares, start selling calls on those shares. And then if it drops and I can no longer cash flow those shares, then I'll add another 100 at 18 or 17 or 16 bucks or whatever it may be when that plays out. It's having a responsible plan that isn't crazy, right? But you just churn that cash flow and you have faith in the investment. I mean, if you can't believe that gold is a good investment for cash flow purposes, and once again, directional is so hard on gold. On silver, on gold, directional trading is very hard. That's why I'm an exclusive. That's why Emily's an exclusive cash flow trader on gold. And if you can't add more in this environment of fiat currency and monetary spending, listen, when yields rise, gold's going to take a little hit for a minute. Anyone believe that gold's not a good cash flow investment from now to the day you die? Well, then it's really,
until the end of time.
Like, it's just the easiest part of my portfolio to manage, and not every day does that part of the portfolio go up. But once again, it's about having this diversified portfolio where you have a little bit of this, a little bit of that, a little bit of this, and the little bit of gold I have, man, that is the easiest no-brainer part of my portfolio that I manage, at least me personally. So
absolutely. And you said, keep going, Mark.
Oh, I just gonna say, but to maximize that, learn to cash flow. Learn how to sell naked puts, and more importantly, when you take ownership, how to sell calls on the shares you own. So that during these time periods where things don't do much, you're bringing in income, you're bringing in money, you're lowering your overall cost basis for your investment, and just keep doing that month after month after month after month after month, year after year after year. And Barrick Gold can trade sideways and go between $19 and $30 in the next 15 years. And maybe you'll find great directional pockets to trade that, right? But you will find an excellent cash flow environment. Take the shore money, learn to cash flow gold, learn to cash flow silver. Let's go to silver now.
Absolutely. And you used two different words there that I love. You said plan and system. And plan and system are definitely the way it is, because the plan and the system, the way you invest in gold is different than your plan and system, the way you invest in financials, the way you invest in tech. There is a plan, there is a system, and the greatest one with gold long-term is long-term investments with cash flow on top of that, and that's the system. We don't need to be adjusting like a paper bag in the wind our trading plan when it comes to that asset. We need to understand the assets when it comes to commodities and when it comes to our metals, because they're not going to act like a Tesla or a Bitcoin or any of these crazy, hyperbolic move stocks, but they're always going to be the consistent stocks. And if you know they're going to be consistent, then the plan is very easy. And Mark broke down his plan. Cash flow gold. That's the plan. Doesn't matter what it does, cash flow gold.
I mean, silver right now is showing a little bit of relative strength compared to gold. It's showed a little bit of relative strength for a while now. Once again, because you got to remember about silver, it has that industrial component that's really hot right now, really hot. And then it has the precious metal, not so hot right now, but it's showing, because of that industrial side, showing a little bit of relative strength. But if you want to know one final lesson on cash flow, I mean, silver's basically at the same price it was 7 months ago. Now, if I'm going to buy silver and I'm going to make $1 million, you're at the same price. Your money's been sitting flat. But if you've been selling calls along the way on silver trading instruments, same price as 7 months ago, but you've been bringing in income on that. You've been bringing in income. I write about covered calls and cash flow in the commodity report every week. Come check that out. All right, let's go see what the party's doing, the popcorn chart of the day. Let's go check out Bitcoin.
You didn't want to get a snack at all? Because
oh no, shoot. Well, we'll do the dollar here in a second. We'll do the dollar here in a second because it's important.
The dollar is important, so I did want to take that one. But I don't know if you can still get a snack, though, being the host and all.
Listen, I can do whatever I want. I'm the host, right?
You should have brought
listen,
the dollar first and then gone and got the snack and come back and talk about Bitcoin while you're eating this.
all Bitcoin traders right now, listen, you need to send a letter of love. I know Valentine's Day is a little over a month away, but my girlfriend, the 9 EMA moving average, is doing its best to hold up the volatile Bitcoin right now. Just doing its best to hold up that vol. I mean, that she is so strong. That first test of a moving average, when a moving average hasn't been tested for a long time, I did an extensive study and has a very high percentage chance of holding on a first test after it hasn't been tested for a while. Boy, it was really put to that test yesterday. Nice close above, holding today. You guys have any Bitcoin exposure right now?
I
I
have
have very little exposure.
Yeah, very little. So yeah, back when I liquidated in 2017, I liquidated just in an even number, so I had like percentages of Bitcoin still. So with the move, those percentages have been doing something, but I haven't been adding any more back to that position. So I have some exposure. I mean, it's like 0.001 Bitcoin, but it's there.
Yeah, I'm with you, Cody. I took profits back in 17, left a little bit in there, and it's been doing whatever it's been doing. So it's not even something that I check every day, because it's a long-term investment for me. Whatever it does is whatever it does. But yeah, I still have exposure to Bitcoin.
All right. Does the 9 hold this week?
It better. It should.
It's a quick trip down. It's a quick trip down to the 20 if it doesn't, right?
She better hold. She better stay strong and hold.
Well, I
Hold it.
trust your studies and I trust all the back testing you've done, because you've probably put more effort into back testing on moving averages than anyone that I know. So when you tell me that your back tested studies show that the first test, the 9, has a high probability of holding, then I'm going to stick with your numbers and trust your research there, Mark.
Well, it's the first test, right? After that, it starts wearing out, right? So every subsequent test is more likely to break. It's a quick trip down to the 20. Greg, you playing Bitcoin in any shape or manner?
I was playing something called GBTC. It's kind of a trust, I guess,
Yes.
Bitcoin trust.
Designed to mirror the price of Bitcoin.
Bitcoin, yeah. There's a premium built into it, so it's not perfect, but it's something where you can kind of get involved without the futures contracts for most folks are way more money than they want to put at risk, right? So this one here, it's still pretty frothy to me, as I just heard you talking about there. Pulling back to some level of support though, which it kind of almost looks like it's back to level of support of 35 there. If you're going to play it, I think this is the way most people would have to play it. This is kind of like your ETF, if you will. Again, there's premiums involved there, but yeah. Other than that, I'm still an old. Well, they call me Old Money Holmes for a reason, right? I'm still an old gold, silver, platinum kind of guy there. So Bitcoin, I've dipped my toe in the pool, but that's about it.
You dip your toe into the pool, but that's about it. All right, so I mean, there we are. We're round up all our different things. We're going to go into our stock talk now.
No, we're not. We're going to the US dollar
I
first.
forget. Listen, I forget. Listen, it is so ingrained in my head. I walk away and take a snack every time we talk the dollar. And I've actually been reading a lot about the dollar because it has ramifications in different markets lately. But I'm so ingrained in my own internal routine. I genuinely, honestly didn't even mean. I just completely forgot about the dollar. So I'll let you all three take over for a minute.
Cody, you have the floor.
All right, he is going to get a snack, so I'll take the floor. So there's a lot of interesting things that are really happening in the dollar. So from a pure technical standpoint, we see that we're having a deeper pullback within the dollar, and I find it very intriguing that we see the likelihood of a larger stimulus package coming to the floor in the House and the Senate, correct?
Mm-hmm.
And then we see the idea of a large infrastructure package also being speculated in the future, right?
Sure.
Both of those would be adding massive amounts of inflation to the US dollar. Now, when you get massive amounts of inflation to any currency or any commodity or any asset, the inflationary aspect of it is typically going to drive the value down. But what we saw from some of these speculations is we started to see increasing yield prices within different bonds and assets within the US economy. And from those, we actually saw the dollar gaining from the idea of the increased yields. So it's kind of two contradicting points that are kind of in at odds right now, is that we have the overall idea of these packages causing inflation within the overall currency itself. Then we also see the increasing yields to the US economy. And being fiat currencies, fiat meaning that it's, paper or promised by the government, what fiat currencies are really backed by is the overall performance and GDP, the yield of the country's economy itself. So even though we're adding these inflationary packages, inflationary packages, what I'm going to call them, they're not necessarily stimulus, they're just inflating things, is by doing so, it's perceived that that investment, that inflation that's added into it will actually increase the overall infrastructure and long-term the GDP of the US economy. Now, if that happens, that's why we've seen the yield rates start to increase. So as yield rates are increasing, that's adding strength back into the dollar. So it's very interesting that we're seeing two different competing arguments as to where the US dollar is going to go. So from a pure technical standpoint, we see the dollar had a deeper retracement than its little short bear flags that we've been seeing. And I really wish I could pull up $DXY because you can see it a lot easier on $DXY. So traders out there, check out $DXY rather than look at UUP, and you can see the retracement a little bit more clearly. So the question is, does it hit this level and then continue downward, or does it start to put in more of a reversal pattern? So just looking at UUP, I'm seeing, the creation of a potential head and shoulders. Now, it's not going to be a head and shoulders if this retracement continues on to the bearish side, but we can see the possible formation of what would be a reversal pattern, which would send the dollar into more neutrality versus the bearishness that it's been in now. So I find it very intriguing based on the argument of currency itself versus the economy. And as we all know, the market, the currency, and the economy are all different. They have correlations, they have relations to each other, but they're not all the exact same. So where the dollar goes from here is really up to what we see actually coming down the pipe in the coming month and how the dollar reacts from a technical standpoint. So with all the different speculation out there, I want to see some sort of technical move on the US dollar before I really start to get intrigued on the US dollar. I actually think there's better currency trades out there, which I'll talk about this coming weekend, in cross pairs that do not involve the US dollar. So if you're interested in Forex trading, guys, check out my coming report this coming weekend. And with that, Mark, I will pass it back to you.
The dollar.
Oh, now that Cody's put me on the hot seat, I'm gonna put him on the hot seat too.
Oh, good.
With this second shoulder, the expectation that it makes that second shoulder there, Cody. Is there a trade to be made here, like a quick Forex trade here down to that support level, let's say 24.20 there? Is that enough of a movement for folks to get involved with, or do they need that deeper movement down to 24?
Yes and no. Yes, because it's currency, and currency doesn't need for a move, even as small as that one in the currency market. That's actually a pretty decent move. So yes, you could get involved in that, and I wouldn't necessarily do it directly off of UUP or off of futures within currencies. I would do it with some different currency cross pairs. So okay, you could see the US dollar decrease and possibly form that second shoulder. And again, this is getting a little bit more advanced, is when you can start seeing patterns form before they've actually formed, because I can't call this a reverse head and shoulders until that shoulder does form. Now, I can say that it's got a potential to retrace, so there's a lot of indication that it could pull back down to that point. Now, whether it does or whether it doesn't depends on price action. So
it looks like you've got a higher pivot there. Is that fair to say, from that last pivot, say a week and a half ago? That if you go back 1, 2, 3, 4, 5, 6, right, that green candle right there.
Yeah, you're looking at from here to here.
Yeah, there to there. Just a slightly higher pivot that it's formed there.
It is slightly higher, and this is where I was saying that UUP is the only instrument that we can really show on simulated trading. But
Okay.
the better place to look would actually be $DXY, where it did not break above that pivot high.
Okay, fair enough.
Yep.
Awesome, thank you.
But it could definitely be a short-term trade. And in Forex, a short-term trade could be a day trade or even swing trades in Forex. Very few times have I held swing trades over a week. I'm usually in Monday, out Friday, or in Monday, out Tuesday, out Wednesday. Because when currencies do move, they move quickly. So swing trades in currencies, I also don't want to hold over the weekend because that is the only time that currencies can gap. And I don't want to be in an asset that can gap over a weekend when you're leveraged 50 to 1 in the Forex market. So I typically don't hold swing trades and currencies over the weekend.
Excellent.
All right, thank you very much. All right, let's go into stock talk right now. And what I want to know today, because I'm always greedy and I'm lazy, and I don't ever want to do my own work. I mean, that is my path to riches, is to be part of a tackle trading community and do very little work on my own and just, pay attention to all you fine folks. Give me trade ideas. What you trading right now, Emily?
We're talking about this in pre-production. I've been tracking DocuSign for quite a while. It's been sitting sideways for a few months now. Now it's a stock that I love to play. So
what is it?
DOC, yeah. And yeah, so I've been watching this, and it's really just been hitting that resistance level at that 254, 255 mark. And if I look at the weeklies, it's also looking to break out of a resistance level on the weeklies as well. So this is something that I'm looking for, that breakout, because if it breaks out there, it's a clear shot to that 290, that old high that it had. So I'm really looking to see what I can play something here and maybe get into either a directional play or cash flow play. I haven't decided which way I'm going to play it, but I'm keeping an eye on DocuSign for a potential breakout this week. It did attempt to do that today, and it's looking that it might close above that. If you go back to our daily, Cody, you can see that there's a W forming there. And it might, if it closes above that resistance level today, that could be a play that I might get into this week. So that's what I'm looking into today.
I actually really like this pattern, Emily. These ascending type channels where they're not necessarily the pullbacks or like a bull flag or even just a high base, when the overall base itself, and I love it when you look at it on the weekly, that you could see this grind up, which shows that it doesn't even necessarily want to base sideways. It wants to move up.
Yeah.
I've seen these break pretty intensely when they do break. Almost more than high bases do. So I really do like this pattern on the weekly chart. And I think your target of 290 is a really nice one. If we can get a close probably above 260, I think 290 is within swinging distance pretty quickly.
All right, Cody, what are you trading right now?
What am I trading right now? I actually am waiting for Friday, because Friday is my favorite day this month, expiration day, when all of my liquidity opens back up. As far as actual directional trades, I'm pretty simple. I look at the same ones over and over. Most recently, I've loved the movement in the financial sector, so I pointed out that's Wells Fargo trade, but of course this is already moving. I do think that it still has some more potential to the upside to move. I mean, we talked metals. I love what I'm seeing in FCX still. I mean, we pounded the table on this break, and now that we got that yesterday, I like how with the long wick to the downside, it rejected that. Now we have a doji today. I can see this continuing to the upside as well. So these are two that I'm looking at. And then,
out of curiosity, what am I getting for those 25, 26 naked puts for February? I haven't looked at that this week.
All right, let's see what we're getting for 25, 26. You can get between $50 and $60, 66 or so.
What do you think about that? Like for someone that has lost their FCX shares a couple times this year, more than once been called out on FCX. I don't currently have FCX. FCX, for anyone that is watching this first time, one of my favorite trading instruments in the last 8 months, but I don't have any shares right now. What do you think about a 26 above that old resistance point?
I absolutely love it, because if you were trying to play this as a initial break, your trigger is going to be, above 25, maybe around 26 is where your trigger would have been for that initial break. So what you're essentially doing is looking for that breakout pullback, but playing it via a put. So you're going to get paid to take a trade on a breakout pullback. And I love both of those ideas. Cash flowing off of, so breakout pullback is my favorite technical pattern when it comes to delta trading. And to add some theta on top of it, I like that idea. I love it.
What do you think?
You guys have any issue riding that through earnings? Because you got earnings on the 26th, right? So it's going to be a short time.
This is my rules on earnings, is that on commodity stocks. Now, if this was Cisco, right? If this was IBM, if this was Intel, if this was Apple, I mean, that's one thing. But like on commodity stocks where I've already known the price of the commodity the whole earnings season, you know, it doesn't violate a personal rule of mine.
I would look at typically something I'll do as well is I'll go back and look at the last few earnings too. And if you look at at least the last two here, this thing has done absolutely nothing from a movement standpoint. So if you've got that out of the money put, or you got that out of the money credit spread out there, you can feel pretty secure that this thing isn't exactly a massive gapping stock or even a massive mover for that matter. And I think that can make you feel a little bit more secure in riding one of these few earnings.
Right, but and the key thing to take away from that conversation is that Mark loves FCX and he does not mind owning it. He owned it before. So again, do not sell naked puts on things that you don't want to own, especially if you're going to do a naked put through earnings. It better be on something that you're willing to take ownership of.
That's right. I'm not selling naked puts on Tesla anytime soon, right? You know.
How about on Chipotle Mexican Grill? So you get the next listeria outbreak.
No, I'm not doing that. Listen, I had a naked put on Chipotle way back in the day and then I was just looking at the news that night and I saw rats falling from the ceiling in a Chipotle. And I was like, oh, stock's going to open up down. Yeah, that one was a wild ride. So
I got a story about rats. That's funny. I was in Vegas with a couple of buddies and we had to fly home from Los Angeles. So we drove to Los Angeles. So I'm sitting there in LAX, and in LAX, there was a little airport bar. This was at like midnight, and it was the only thing that was open, and it was connected to a Burger King. There was a Burger King right beside it, and it was so funny. Me and my buddy are sitting there at the table having a pint, and we're looking over, and there's a sign that says AAA rating for cleanliness, and it was like a plaque on the wall of Burger King there. No sooner did I get done reading that sign, but I looked down, and doesn't a giant rat running by? And I'm like, are you kidding me? If that's AAA rating, I don't want to see what a B or a C is. It was just priceless. So yeah, good times.
That makes me laugh. That makes me laugh. What are you trading these days, Greg?
So you know what, I've been doing a lot of credit spreads. I'm a cash flow guy at heart. You know, old money homes, covered calls, naked puts, all that stuff. I do a lot of credit spreads. Walmart today was one I threw on. It's got earnings a little ways out there. Just love the strength that this thing is showing. Came down, nice pivot, broke out again today out of that 148 level there. Big pop. You can get some decent premium way down here. I forget what I think I sold under the 140 actually. So you got multiple levels of support. You gotta give it some time. Obviously, you're looking about 30 days out.
And we pull up the weekly chart. My favorite thing on Walmart right now is the weekly chart. And I talked about this a couple weeks ago when it happened. So you have that rising 20 weekly, which I think is the most underrated indicator. Whenever price comes down to the penny to a moving average, that shows me there's no fear at all. The algos buy it up at the penny on the moving average. And when it doesn't even go down, when you don't see a wick at all below a major moving average like that, there was no fear at all. Stimulus money, retail is a sneaky play in retail right now. I mean, we all know American consumers. We all know what they did the last time they got stimulus checks. Retail did very well.
Aren't they the only stores that are open?
Well,
the big box
So
stores?
you mean history will repeat itself again?
Well, you know, and the thing about it is, what's important is that the market thinks history will repeat itself again, right? And so there's that self-fulfilling prophecy. There's that front running. I love it. Now, what exact credit spread did you do?
I think I did the 139, 136, and I got 10%. I got over 30 cents for it.
All right. How far out you go?
I believe it was the 12th of February.
All right. 30 days out. You said you built the 140 or 139?
139, 136.
All right. Let me get rid of this butterfly on there. All right. So
I got over 30 cents for it. I wouldn't take anything less than 10%. That's my rule. So if you can get filled on that, great. If you can't, then that's okay too. If you look at this play, you've got a ton of support. 140 being a round number. You've got several levels of support before then. Weekly, like I said, weekly, you're way under any levels of support there as well. So your risk reward here is your risk reward is a little bit out of whack, but your percentage of cashing this trade is pretty high.
That's a high probability trade.
High probability trade. And I like that you said the 10%. And if you don't know out there what he means by that is he's putting up $300 to make this credit spread, and he's getting paid, or he's putting up $300 to get paid $30. So that's his 10% that he's not going to put a credit spread on anything less than that. And I agree with the technical patterns that you're seeing on Walmart. I think that's a beautiful trade. I wish I would have taken it myself.
What differentiates, because I know a lot of individuals out there that I've met over the last 15 years of being in the markets that will be like, oh, I'm going to do this because I have a probability, and they don't even analyze the technicals in making their decision. It's just not, hey, I'm going to go sell an out of the money credit spread. It's, here is the technical reasons I'm now selling an out of the money credit spread. And when you line up that, I like your chances of making money. I'll take that.
And that's the way to approach any trade as far as I'm concerned. That's a good point you made there, Mark. The reality is I look at this and I go, okay, what's my defense first, right? I'm a Chicago Bears fan, so it's always been about defense, right? But I'm asking myself, how can I defend this position? Well, the defense of this position is A, I just got a breakout. B, I've got several levels of support from the price, the candle patterns themselves. I've also got several moving averages that are acting as support. I've also got nice round numbers. So if you think about this, this is like me running with the ball down the field with 5 blockers in front of me. Okay, the chances of me getting through there is pretty darn good. You know what I mean? When you got 5 blockers in front of you. So you start to break it down like that. And then you can go in and you can build the trade and you can use your own personal rules. One of the things Cody mentioned is I'm putting up 300 to get 30. Actually, I'm putting up 150 to get 30 because I've got margin there. Okay, I've got margin there. So it's not 300. The spread is not $3 for me. I get half of that as margin. So I'm putting up 150 to get 30. That's a pretty good rate of return. Okay, that I can live with, right? And I know that with this high probability, and then when you add on, the other part of, especially with credit spreads, naked puts, where you don't necessarily want to own something, you might have some folks here that don't want to spend $150 a share on Walmart. If you don't want to own something, then you've got to have good hedging techniques. You've got to have skills where if this thing starts to go against you, you can put the right things in place so that it doesn't hurt you. You can reduce risk. You know what I mean? If it starts to fall, you can reduce risk. You can add, leg into a position as Mark does quite a bit and Tyler does quite a bit. All of these things can offset some of the damage, and that's really where the skill set comes in. If you've got that skill set, these things can be really great trades from a risk reward standpoint and from a probability standpoint as well.
Yeah, and let me add to that. But for cash flow trading, this is like the Goldilocks of cash flow trading. I wrote a blog a couple of months ago where we talked about the 3 C's of cash flow, right? You always look at the chart, and back to Mark's point, don't just throw out naked puts and bull put spreads and bear calls and all these things and you have not looked at the chart. It's the chart, it's the cushion, and the cash flow. All those 3 things have to come in play. And this setup right here is what I love because it is that Goldilocks where the chart is doing what I need it to do. I've got enough cushion that even if it does break down, I have great support levels and I'm still getting a decent cash flow. This is like that spot on, perfect cash flow trade that everybody looks for. You don't always get them like this, but this is what I call a perfect Goldilocks cash flow strategy because you get all 3 aspects of it.
I love that. And to all those points, I just want to point out, like based on the numbers that he sold, he sold roughly the 14 delta by the 9 delta. And when Mark was saying, don't just do it based on probability, that's basically the same thing as if we were to take the opposite side and say, okay, we're going to sell, the 14 delta by, the 10 delta to the other side, which is above the chart when it's heading to the upside. Same probability of, just by looking at the credit spread itself. But would anyone out there sell a credit spread up here with a chart that has a bullish pattern and a break today moving there? Because the probability, not looking at the chart, as Emily's saying, you got to look at the chart. The probability is the same. Would anybody sell a credit spread up there with the chart heading up towards that credit spread?
Nope.
No thanks.
Nope. So and I just want to point that out because the probability is there. The credit's not necessarily there, but it exists. The probability says that it should work. But I like the chances of the one below it on a bullish chart than the one above it on a bullish chart. And that's why we always have to look for those technical patterns using the chart, as Mark, as Emily, as Greg all broke down, that the chart is the first thing that we look at when we look to sell those credit spreads.
I got one more quick one for you guys here.
Hey, absolutely.
FedEx, FDX. So this is a not ready for prime time trade. Okay. This is something I'm watching right now. As you can see, FedEx has been kind of getting beat down, but look at the level that it's starting to turn at. So for those of you who have watched any of my videos or any of the shows I've done, I'm always talking about rounding bottoms. So this is something that Cody said was seeing a pattern before it actually develops. Okay. You can see a pattern before it develops, but you don't act on it until it develops. That's very, very important to remember.
Ooh, somebody write that down. That's gonna be
what I'm seeing here is this thing is starting to round out. Does that mean I'm going to go make a trade on FedEx today or tomorrow? No, it does not. What it means is if it starts to violate some of the resistance overhead, okay, the 9 EMA, the 250, something like that, then I will be interested in doing a trade here. But what I really like most about FedEx here, and this thing's just starting to percolate a little bit like a cup of coffee, right? It's come right down to that 240 level, which was a very hard resistance and a very good support back a few months ago. And we've seen a really deep retracement. Now what we're waiting for is those moving averages to curl over, which the 9 is just starting to do. You can almost kind of see it in your mind. What you do is you let that curl over, you let it start breaking some resistances above. The more conservative traders could wait till it break at 260. The more aggressive traders like myself, I might leg into a small position if it breaks 250, which would be above the 9 EMA. Then I leg into it again at 260, so on and so forth. Because if we get past that 260, you've got a lot of room to run here. That 300 is definitely in play. It might stall around the 280 or something like that, but it's definitely got some room to run out there. So this one's kind of the one, like these are the kind of ones I kind of sit back and I look at and I say, you know what, I'm going to keep an eye on this. I might put an alert on it. You know what I mean? These kinds of things, and just pay attention to these, because these can turn out to be really lucrative. If you get a run in here, I don't know what the IV rank is on this right now, but if you get a run out of this and you get maybe a diagonal trade or something like that in this, you can make just a small fortune in a trade like this if it gets a run back up to those old highs.
Yeah, we probably are forming the head of the head and shoulder, right? Like we've already got the shoulder on the one side. We're starting to get that, that head forming, and so I definitely see it.
Yeah. It's like I said, it's not ready for prime time yet, but it's something that you might want to keep on a watch list.
Love this. Love it.
And I would share the trades I'm making, but I don't want future Mark to judge millennial Mark right now. Let's just say
you gotta live in the now. You gotta live in the now.
Oh boy.
Listen. I listen. I like some Fubo at naked puts at lower levels, but I ain't gonna.
Hey, Mark, what's that Capital One commercial with Jackson? What's in your wallet? What's in your top 100? I need to see that list.
I got some bankrupt theaters, and they got about 4,000 SPACs, and Solo that makes that crappy electric vehicle 2-seater car that I don't know why a human being would get into.
Oh, good Lord.
But
yes,
I'm pretty sure if we looked at portfolios and we just randomly looked at Mark's portfolio, not knowing it was Mark's, we'd be like, what kind of new millennial age trader is this?
I got some genius brands.
I've got to preface this for Coach Mark there. This was a man that used to make his living off of understanding odds on trades. So, it's so out of character to see this, right? So
yeah, listen, it's
this is the Doyle Brunson hand. It's a 2 and 10, and he's bluffing big time right now, hoping that it pays off.
Listen, it's all work until it don't work anymore. All right. I want to give one last thing. I had a student email in at Team of Tackle Trading, pull up SPWR. And they're like, I'm a new trader. I'm ready to make my first trade. And what I'm thinking about is doing an option 5 or 6 months out because I think this stock is going to go up. And I was like,
red flag word. Red flag word.
I know, right? I think this stock, and this is the one thing, and this is the lesson, and I want to share this. We never base things on we think. That is how you become a losing trader. We do things because we have an edge, not because we believe, not because we hope, but because we have an edge. So obviously SunPower has had a vicious uptrend in recent months, going from 10 to 30 bucks in a relative short order. Along the way, we've had some nice breakouts. Like we had a breakout at the start of November. We've had support levels form. But let's just analyze this from a technical point of view. So to this individual, and what would you do? What would be your signal to get in other than thinking itself?
For me, it's clean and simple. It's got to break that high.
Just that
That's
simple.
it. It's that simple.
I was going to say
there's nothing else to look at that.
Same thing.
There's a couple of things to look at here. So a couple things that are it can be good, and a couple of things that are a bit concerning. So as we were talking about a bit today, watching how patterns form, I'm actually starting to see an M for murder forming
I see
here.
an M.
With the 25 level being very, very important. Now this thing's still working its way down as far as I'm concerned. It did bounce off that 9 EMA there, but there's nothing to say we got a red candle today. There's nothing to say that it doesn't get back to that 25. Now at the 25, that doesn't mean that it's going to break down, but what it does mean for me is I might put a short trade below that 25, because if it does, it gets down to 20, which would be a good run. Okay. And I'd be okay with a bearish trade there. Or what I might do is wait for confirmation of the upside, and then you get a run from 25 back to 33. Those are trades where I want to get in. The only other trade, as Emily and Cody had already said, was I need a break of 33. I'm probably not even getting in above that 32.86. I'll actually wait and be more conservative. Get it to break that $33 level, because it's a psychological level. And then once it gets in there, sky's the limit here. There's nothing holding it back that we can see on this particular chart. So, you got to let these patterns play out. I don't think, I'm not saying I think this is going to pull back to 25. I think it could, but it could just as easily break out at 33. So what you do is you prepare yourself for both scenarios, right? I can put an alert down here at 25.20. Okay, and wait to see if it goes up. I can put an order in to buy a buy stop limit order at 33, or wherever you want to get in. If it's above the high, that's fine too. I can put that order in already and let it sit there and percolate, and then let the market, as Cody said this right off the bat, right off the start of this show, you got to let the market tell you what you want to do. I don't want to try and outthink the market, because every time I've done that in my 10 to 15 years of trading, every time I've tried to outthink the market, it's taken money away from me. It's just not a good plan. Okay. Yeah. So let's not try and outthink it. Let's just act it, right? Let's just do what it wants us to do. And then it pays us handsomely. Right?
Yeah. And it's funny how you saw that pattern. You saw the M formation. And Cody, if you don't mind drawing the M and finish out the M if it was to actually happen. And then also draw me a cup and handle, because if it does break above that 33 level, like Greg said, then we have a cup and handle. So it can go either direction at this point. So trying to get anywhere, trying to get in here in the middle of nowhere, you don't know which direction it's going to go. You have to wait for that confirmation to happen.
It's a 50-50 shot, and time is against you. If this student wanted to go and buy some options, it's essentially a coin flip here. And yet, You're going to coin flip with time against you, direction against you,
And this is the key.
you know, volatility necessary against you, right?
Will you pull up my baby Palantir, PLTR? So PLTR, if it ever drops into the low teens again, I do sell some long dated options on my baby Palantir here. But it had that ran up and it became a stock du jour. And I would read on the message boards, people buying these huge chunks of out of the money options. And this is, it's the opposite of cash flow, right? It's when you have all of this theta, all of these options, and then a stock decides to take a month off, decides to take 2 months off, decides to take 6 months off. And those options bleed. And so the stock's not doing anything, but you're losing money. Understanding how options work and understanding the signals, because there's nothing wrong with using options, right? Options can be very powerful tools when in conjunction with technical analysis, we get clear signals. So, you know, it's just one of those beginning lessons. You know, 2020 taught a lot of bad lessons. And this will be my final thought of the day, and then we'll get into final thoughts from everyone else. 2020 learned a lot of bad lessons. You know, we've been around a long time, the collective group of us at Tackle Trading. We've seen all kinds of markets, and we've seen how some of the bad lessons in 2020 are going to be really painful lessons for traders if they don't learn the proper way to trade moving forward. So, you know, learn. And before you dive in on that first trade, nothing wrong with placing a few paper trades to get the feel of it. Emily, what are your final thoughts?
Oh, final thoughts. You know, market's really not doing much today. It's another just wonderful day of just cash flowing.
Another day in cash flow paradise, right?
But yeah, but I am looking for those setups, especially in those sectors that, you know, we are seeing, you know, the shift in, you know, like XLB and the financials. And, you know, I might find something to play directionally today while I'm still cash flowing, or this week rather. But when the markets are doing nothing, you know, enjoy the day, you know, look at your accounts. If you've got cash flow trades on, just go out and enjoy the day. There's really nothing much to do.
Cody, final thoughts.
What was that stock that the student had just asked you about?
SPWR.
SPWR.
SPWR. All right. I'm going to use this one for my final thoughts. And what my final thoughts are, regardless of what you see, what you think, whatever is going on, you notice how quickly Greg was saying how, you know, when he sees this pattern and what he's going to do, he's like, I'd probably put an alert down at 25. How quickly I was able to just click that button and set that alert, you know. And then if I think this is going to go bullish and the pattern I'm seeing is that possible, you know, maybe not an M, but maybe that cup and handle that Emily was talking about, then I'll set a purchase order above 33. And very quickly, just all I did was I went and I set that limit and I put it into market. And at this point, then you do what Emily just said. Go about your day. Don't get impatient and try to will the market to do what you want it to do. Don't try to will a stock to do what you want to do. If you see a pattern and you see a trade, you set up the trade, you put it in the market, and you walk away. You're done. Have the patience to let the trades that are going to work for you work, and the ones that don't, you cancel out those orders and you move on and you put that money to work elsewhere. So like we were talking about the market rotation, let the market tell you where you should be in. We put it out diversified stocks. Set your trades within your portfolio design and your asset allocation and all that stuff, and let the market tell you which trades you need to be in at what times. And the simple way to do that is to set up those, you know, stop limit buy orders. And you can also do it as bracket orders with your stop already included and with your target already included. And then let the market decide which trades you're going to be in. And that's the proper way to trade without trying to will the market in your direction. Because every time you try to will the market in your direction, you'll realize you have a lot more emotional strain. You can't pass the sleep test. You're worried. You're always staring at the screen. And that's not the way to be a trader. Trading is a skill and asset that we can use to build financial wealth over time, but it's not something that should dominate our lives. When this show is done, I've already done all my trading for the day. And when this show is done, I'm moving on to the other part of my life. I'm done for the day. Nothing else is going on with this chart. And if I get into a trade, awesome. I've already set the rules. Market triggers me in. And I know my rules are good. I don't even have to look at it to see, you know, what I got into, because I know that if I set up any trade, they're set up the way that I trade within my systems, and I let the market do what it wants me to do. That's my final thought.
Greg,
Very cool.
final thoughts. You get the last word tonight, Greg.
Awesome. Yeah. So just hard to follow those two class acts there, and M and Cody, and Mark as well. The reality is trading is, I remember listening to Market Wizards. I don't know if you guys have heard it or not, but the Market Wizards is just an interview with some of the top hedge fund managers and traders in the world. And I forget which one said it, but he basically, the way he talked about trading is, he said, trading is 10%, physical / mental, and 90% sitting on your hands. And so we've been talking about cash flow today, and that's really what it is. There's a lot of the time. So if you look at the markets over the last 100 years, typically we're in consolidation 60% of the time. 60% of the time we're in consolidation. So if you're just sitting there going sideways, which is what consolidation essentially means, you're going sideways 60% of the time. That means you're going to be collecting cash flow that much of the time. So sitting on your hands, not doing, not pushing for trades, not expecting things, and just taking what the market gives you can be very, very lucrative. Okay. And so really what we got to learn to do, in addition to all the skills that Cody talked about, setting orders and deciding which trade to take and all those kinds of things, is building our patience. Sit back and collect 30 days worth of cash flow. Sit back and throw on a calendar or a diagonal spread. Collect 6 months of cash flow. It feels so good. That's why Mark Justice is the king of puts, right? It's because it feels so good. The market doesn't have to do anything and go completely sideways, and you're still collecting cash. And that's what it comes down to. So my final thought is, get in there, find the trades like the Apaches of the world, and those kinds of trades where you get a really good rate of return to sit there and collect some cash flow. It feels good. And if it feels good, do it. That's what I say.
Hey, listen, you give me the host of the show, we're going to talk oil and cash flow all day long. I love the show. Thank you for watching, everybody. If you're pro members, or even if you're not, you have any questions, you can email me at team@tackle-trading. Everyone have a wonderful trading week, and have fun out there. All right. Take care.
Take care.